All right, what's going on, man? We got a trade recap today for Thursday, June 18th. Took a loss this morning. Don't really don't want to be making this recap this morning. I would rather just be logged off for the week because tomorrow is bank holiday and not make this video, but this is what I do. And if this were a win, I would be hopping on here to make a video. So took a loss, and the whole purpose of this channel is obviously to be as transparent as possible. So with that being said, gonna make this pretty quick because I do have a exam later today that I gotta leave for pretty soon for one of my summer classes. But daily bias coming into the morning, this is what we look like. I said it's pretty simple, straightforward, long bias. Hope we retrace off of open in order to get an entry to this first draw and liquidity here, because the next draw is 500 points higher. So this is what we look like coming into the market open. Very clear long bias to this buy side liquidity. And as you can tell, I took a short this morning. So why did I take a short? First of all, you see these blue lines marked out. I was actually trading outside on my laptop this morning. It's pretty peaceful, but the settings were just a little bit different. But regardless, like I'm gonna go full screen NQ. But we came up and took this high pre-market before the market even opened. And so at this point in time, the next draw on liquidity is 400 points away. If we're going to take longs, obviously it would need to be clean, obvious displacement higher into the range, but we had come up and rejected lower. And so, yes, this turns into like obvious high time frame buy model, potentially within another high time frame buy model. So you could be like, Preston, why are you trying to short in these conditions? You're going against all the high time frames. And I realize that. I know it's going against the high time frame bias, and that's why I waited for various forms of confirmation, and even with the various forms of confirmation, this trade still failed. So my main confirmation was let's see, scaled out, obviously not on the 1 minute chart this time. We get the first 5-minute candle. I'm like, ooh, that's a pretty nice displacement candle. The next one comes down and we're all the way down here in the range. I'm like, ooh. At this point in time, though, I'd want to see the 15-minute candle close through this gap if I were to potentially target these lows. And these lows, I didn't have them originally marked out because the high time frame bias was bullish, but these are 1 hour swing lows. And it's like, okay, if we're going to reject this is basically the market structure shift high to confirm, in order to confirm this buy model, right? This buy model, the move higher to this buy side liquidity and all-time high isn't confirmed until we get this market structure shift. Like, we've gotten the market structure shift, we've lacked displacement though, but that happened after this loss. So we came up and swept this high and rejected and got almost a 200-point candle down to the downside. Very clean 15-minute displacement candle. And normally this is a scenario where if the high time frames were aligned with my original bias, I would be super aggressive here and placing a limit order with a safe stop loss for about a 1.2. If the high time frames were in line with this trade. However, they weren't. And so this isn't an area in which I would place a limit order, even though this is a very clean 15-minute candle close. I was kind of debating on it in real time, and I keep zooming out, and I'm like, no, if I'm going to take a trade to target these swing lows, I need to have more confirmation. So I didn't place this limit order after this 15-minute candle close, even though it was a nice 15-minute candle, even though we do have these draws down here. And I wanted to see extra confirmation. So I wanted to see a retracement and a flip in order to give me that confirmation that we're going to hold and continue lower. And that's exactly what we ended up getting. We retraced to this 5-minute gap and equilibrium of this initial range. And so at this point in time, I'm like, okay, I need the market to prove to me that we're going to hold this and continue lower um, to these draws. And I felt like I had enough in this scenario. We come up, tap equilibrium, tap into this 5-minute gap. We get a rejection wick here. The next candle opens, and it's a pretty nice displacement candle. It doesn't close all the way down towards the extreme of the candle. And so I wait for the next candle to open up and kind of continue the move lower. The next candle opens, we can kind of continue the move lower, and I enter here, break even at the internal low, obviously, and then take profit at these stacked low resistance 1 hour lows. And we ended up not taking them and reversing. And yeah, that's that. That's the loss. That's the losing trade. ES was also pretty bearish. We had an SMT at the highs here. This was that market structure shift high. ES failed to go that high. ES was holding its 1 hour gap, failing to go through it. And so although like we're reacting out of a high time frame gap, although the high time frames are bullish, this rejection here and this reaction holding bearish structure here led me to believe, okay, maybe we're just going to take this liquidity before heading higher. That ended up not happening and ended up taking a loss. But pretty much is what it is. I mean, it's just a loss. I think the reason this loss hurts a little bit more than a normal loss would is because I know that I have that smaller buffer after taking the payout. After taking the payout this week, I had a 2 trade buffer on these accounts. And then taking that, or trying to trade yesterday during FOMC, taking that loss on one of the accounts. Unfortunately, it didn't copy trade on all of them. So one of them is blown because, like I said, 2 trade buffer. And so one of them is blown. The other two have $570 left of drawdown. So all those factors combined is kind of why this trade, quote unquote, sucks a little bit more than normal. But in reality, losses happen. Is there something that I can improve on in the future here? Yeah, potentially. Potentially could have not entered mid candle and wanted to see better closes on the way down. But in reality, like even after this candle close here in live time, it feels like almost 100% chance we're going to come down and at least take this internal low, which we didn't. So we didn't have a chance to go break even, and ended up getting fully stopped out. So wasn't the 100% best reaction out of this 5-minute, but I more so just wanted to see confirmation and reactions lower to confirm the move lower because of that 15-minute candle. And this 15-minute candle close is what gave me confidence to flip my bias and go against the higher time frames for the time being to see a little bit more continuation down to these sell side targets. So I'm, as of right now, I feel like personally this is more of a statistical loss. In my opinion, I feel like I had enough information that the market was giving me in order to take a good, valid trade, even though it was going short here. And it just didn't play out. So that's trading sometimes. Like that's literally trading sometimes. Like I said, it just quote unquote hurts a little bit more because I have that 2 trade buffer and because I tried to trade the morning of FOMC yesterday. And what do we do in the morning of FOMC? If you logged onto the charts, it literally played out. As soon as FOMC dropped, we get this very volatile candle. There was sell side liquidity here that I was targeting yesterday that got edged during the AM session. You can see it gets edged. We chop around, FOMC meeting comes out, and that's when we deliver to the sell side and to the new week opening gap. So there's a lesson learned there, just not trading the morning of FOMC anymore. And this is more of a quote unquote, I feel like a more of a statistical loss for me. So that's that. And I've already journaled this. Like I said, didn't even want to make this video, but I am. and it's always important to reflect. It's more important to reflect on losing days than your winning days. And it's really easy to want to journal and to want to make these videos on days where I win, on days where I get a payout. But it's even more important on losing days to figure out what went wrong. I know what went wrong yesterday and how I can improve. And today went against high time frame bias. So um, like I said, feels more statistical. Um, Losses happen, but it's always important to reflect and journal because this loss would not bother me whatsoever if I did have that full 4 trade buffer. But that's not where I'm at, and I just got to deal with it. Um, so I have 1 trade left on 2 accounts, um, which is fine, and just gotta continue trading to the best of my abilities. Whatever happens next week happens. And I know that if I stick to my strategy in my proven statistics that I will be successful in the long run, um, even if these accounts do get blown. But I will say the likelihood of me taking back-to-back statistical losses is pretty low. Yes, it can happen. Anything can happen in trading. But like I said, as long as I stick to what I know, stick to what's gotten me here, and stick to what's gotten me profitable, I will be a-okay. So that's the trade recap for me. Took a loss here. And today was the last day of the trading week. Tomorrow is a bank holiday. So looks like we're going to be primed for longs going into uh, the week, next week. And we will just see what happens. So appreciate you watching. And I will see y'all next week in the market recaps. Enjoy this longer weekend. Take some time off the charts to reset, reflect. Um, and then be ready to get after it next week. All right, I will see y'all then. Peace.